The U.S. economy is in the midst of its biggest upturn in nearly a year. According to data from S&P Global, economic activity across the U.S. in April reached an 11-month high. Other recent readings indicate that the GDP is growing at an annualized rate of just over 2%. The growth seems to be broad-based, led by services. At the same time, jobs growth has accelerated, with job vacancies being filled more easily. However, these reports seem to challenge the narrative that storm clouds are brewing and come less than 2 weeks before the Federal Reserve's next policy meeting. At that meeting, the central bank is expected to raise interest rates by another 0.25%. And so the first quarter may end up being the best quarter of 2023 as tighter credit conditions and elevated interest rates slow GDP growth and perhaps usher in a recession in the second half of the year. With bank tightening credit, the economy may falter. It's a simple concept because we are a consumer economy and the economy appears to run on debt. And as Martin Zweig said, don't fight the Fed. So, with a hike in May, maybe it's time to go away. And today we're going to take a look at one chart, and we're looking at the 2-year weekly on the spiders of the SPY, and the close on Friday was 412.20. So from that October bottom, we seem to have formed a new channel. We've talked about this with the bottom channel line moving up through like that, and then the top channel line moving up through more or less like that. Now, as you can see, here's where we are right now, and it looks like we're having a little bit of a rollover, at least the early stages of a rollover, and that's what we called for last week. So I'm still calling for a rollover. We're only halfway in between the bottom and the top channel lines, so things seem to be stalling. We need to get up to this level here, exceed this point, and hopefully challenge this over here, but it looks to be too weak to do that, so we may roll over. Let's go ahead and take a look at volume. Volume is also heading down, which is not a good sign when you want a market to head on up. Things are weakening. Into the MAC, definitely from this October low, the fast line moved over and above the slow line there in red. It continued on, both continued on up here and crossed just barely over the zero line for the slow line, but the fast line is up here. It looks like there's a bit of acceleration. We'll take a look at that here in a second, but I think it's relatively weak. And as I said, oftentimes they come in threes. 1, 2, and 3. And by the time the market figures out the third one, things change. So I am half expecting things to change. In fact, I think the probability is that we will run out of steam here relatively soon and roll on over. At that point there, you can see things are also slightly downward. There are the tops of those histograms, slightly downward, showing some weakness. Here in the price rate of change, definitely some weakness from that top here to this level here, and it looks like the fast line is heading on down. Into the RSI, we haven't been able to break from this channel, lower line moving through like this, and the upper channel line moving through like that. We really need to break up and into this overbought territory above 80. We're not even close. Moving down here into stochastics, it looks like it's accelerating or continue to accelerate here, but it is still below that overbought level there at 80. It's also below this previous top here. It may get up there, but some of the other oscillators are showing some weakness, so I would say that it is probably going to continue up but not make it into that oversold territory. Here in the Williams, you also have a little fish hook here indicating some trepidation. It is in that oversold territory for Williams at that -20 to 0 range, but once again from this peak here, things seem to be downward sloping with weakness showing. Back up here into the price chart. There, once again, okay, I think again the probability is that we do roll over. Stranger things have happened, but I think the probability is on the side of this rolling over into next week and the following week as well. So let's watch that. It has to have a lot of strength to break up and through that channel line, and with the Fed meeting coming up, I don't think it has the strength. So let's watch it, be patient, and study those fundamentals for any stocks that you're looking at. Right now, once again, I'll say averaging in might be the smartest thing to do. And for today, that's ChewDog Charts. Thank you.